things that I have prayed and just would give anything to see in 5 years, I've seen it now in 4 weeks. By day 2 of life, Luke started to go into a coma. The first 6 months of Luke's life were very traumatic, to say the least. He was in the hospital every week. We would get out for a couple days and be back. His pneumonia was just never really managed. For 6 months, he stayed at a brain damaging level. Every time I would see a doctor, they just pick one diagnosis to fixate on. So Luke has been given a diagnosis of CPS1, he's had a liver transplant, metabolic stroke, cerebral palsy from the stroke, and we also got an autism diagnosis. There were many nights that I would stay up crying, thinking, what can I do for him? Because I feel like everything I'm doing here is not working. Dr. Crawford takes us back, and he was looking over Luke, talking to him. He didn't treat Luke like any of his diagnosis, not one of them. He was looking at Luke to treat Luke what works best for him. This is a place of miracles. So before, I could never get Luke to dress himself. And the other morning I had his clothes laid out for him, and I was in the bathroom getting ready, and I walked back into the bedroom and he had already gotten himself dressed. He was completely nonverbal from the stroke, so never said a word, but he has started to talk. I was like, you get to go to clinic today and see all your friends. And I was like, are you ready to go now? And he said, yeah. And now he's trying, every night he's trying to sound out words. He actually sits at night and in bed and wants me to read to him. He's never done that before. He was not ever using utensils. And I've made videos of him since being here of eating his first cup of ice cream, literally from Chick-fil-A, because he can do it now. I just have so much hope for Luke's future, and just seeing the things that he's done in 4 weeks. I can't imagine what it's going to look like for him when we get home and we're doing home care. Who knows, maybe a year from now I will be sending y'all T-ball pictures and whatever he wants to do.
You're doing awesome, dude.
This place is restoring health, restoring hope to families, and truly changing lives, not only of the patients, but of the families as well.
I'll start by introducing myself. My name's Crystal. I am local here in Austin. I'm a financial planner. I grew up in Smithville, Texas, which, if you're not from this area, it's about 50 miles east of Austin, a very small town, most famously known for the movie Hope Floats. So I was actually in that movie for a whole 15 seconds. So, but yeah, that's where I grew up. But I went to Texas State, got my degree in business management, and I've been doing financial services for about 23 years, which sounds crazy to me that I've done anything for 23 years, but I keep checking the math and it's true. So, but 17 years of that, I've been focusing on financial planning. Prior to that, I was in banking. But when you look at my practice today, 100% of the families that I work with have a loved one with some type of special need or health concern. So it's all I do, all day, every day. And I am part of a team of fiduciary financial advisors, and we provide comprehensive financial planning. I think the reason why people want to work with us is because we do have that expertise in the special needs space. So we're able to integrate in maximizing government benefits and having a plan for legacy when we as parents are gone, what's going to happen, right? And all of that really does need to be integrated. And I do work with clients from across the country. So I'm not quite in all 50 states yet, but we're getting there, and I want to be there ultimately. So there's a couple of other things I'm proud of on here, but let's just, for the sake of time, skip to the bottom. The thing I'm most proud of is my little family here, right? So my husband Irving is one of my business partners. We actually met on the first day of my job. Very romantic. And then we have our 2 boys, Olivier, who is 9, and our youngest, Stellan, who is our kiddo with special needs. So, but very proud of my family. They're the best. So, But let's jump into why you guys might actually be here today, and that's to learn a little bit more about creating security. I always like to start by giving you guys a couple of statistics on what's actually going on in the world, right? I think sometimes when it comes to money or finances, we get, there's a lot of like emotion involved. There's anxiety or fear or shame or I should be doing more and all of these things. So sometimes it's helpful to know that if that's how you're feeling, you're probably, the neighbor sitting next to you is feeling the same way, right? So 82% of caregivers are concerned that they don't have enough financial resources to last their disabled relative's lifetime. So I hear this one all the time. People are very concerned about, can I even retire? Or do I have to work forever? I have to live forever, right? 77% are concerned that they won't be able to retire. We kind of talked about that. 87% are concerned about what will happen to their child when they, as caregivers, are no longer able to care for them. For me, honestly, I think that's what keeps me up at night the most, right? I don't know about you all, but I love to sleep. I haven't slept really very well in the last 9 years. That's, you know, when I had my son, my oldest child. But I don't know about you, but when I wake up in the middle of the night, like in these like cold sweat, like very alert, it's always because I'm worried about something in the future about my kids, right? It's always going to be about that. So, but anyhow, 67% of parents have not set up a special needs trust. My goal for today is to help you understand what even is a special needs trust, right? And hopefully you'll know at the end of that, do we actually need one, right? And then if you do need one, Kat's going to be able to answer all your questions about it. And then last but not least, only 23% of families have a formal financial plan for their dependent, and only 37% are working with a financial advisor. So what I gather from this information is there's a lot of moms and dads or caregivers out there who have a lot of fears, a lot of worries, a lot of anxieties, and for whatever reason aren't getting a lot of help or guidance on how to plan for these things. I don't know if they can't find it, or they don't know where to look for it, or if they're just kind of like too scared to take that first step. So I just want to applaud you all for being in this room today, because you are kind of taking that first step. And my goal is by the time you walk out of this room that you have some clarity and then some direction. So you know what your clear next step is. That's my goal. But today's agenda, so it's really kind of two main bullets. We're going to talk about building your team. Can you guys see okay? Okay. So building your team, we're going to talk about developing your special needs plan, and under that come a couple of pieces, right? The first is understanding your current situation and your vision for the future. The second would be getting the benefits your loved one is entitled to. So we are going to spend some time talking about benefits, government benefits, because we get a ton of questions about that. The next piece, though, is attempting to estimate your future cost of care. I think that's a really important part of the planning. And then last but not least, establishing a special needs trust and funding it. I probably should add one more bullet in here because I did add some slides on ABLE accounts. We get a ton of questions on ABLE, so I wanted to make sure we address that as well. Okay, building your team. So I personally believe that you are going to need at least 3, if not 4, professionals throughout this journey. The first being a financial planner. Right, and I would recommend that the financial planner that you work with have some expertise in special needs planning because it is very nuanced. And I can tell you when I first started doing this in 2018, I had been doing financial planning for about 10 years, and I knew enough to be really dangerous. Let me tell you, I would have probably made a lot of mistakes if I hadn't really spent the time understanding this world, taking extra classes and reading all the books I could get my hands on, right? So you have to just make sure they have a little bit of knowledge in this space. The second person would be a government benefits specialist. So I'll go into a little bit more detail on that in just a moment. But the third would be an attorney. And again, I would recommend that that attorney have some experience in setting up a special needs trust, or at the very least, elder law. There's a bit of crossover there. Now the fourth professional that's not on here that probably should be is a CPA. And the reason why is when you are a parent or a caregiver of an individual with special needs, there's always a lot of special expenses, right? And oftentimes these can be deducted as medical expenses. For instance, if your child goes to a special school that you pay privately for, that's actually a medical expense that you can deduct. So you just need to make sure you're not missing out on any opportunities for deductions there. But let's dig in a little bit. What do each of these professionals do, and what does that relationship look like? So let's start with the attorney. So the attorney is the professional that you would engage with at the point you're ready to incorporate a legal document into the planning, right? So things like a will, setting up that special needs trust, guardianship, power of attorney, right? So it's an actual legal document. Now, in my experience, an attorney relationship doesn't tend to be an ongoing, like, let's meet every year and update things and talk about it. It's usually we engage, we get the document we want, and then the attorney steps out of the relationship. Now, I would encourage you, if you've done some of this planning already, if you have set up a special needs trust, make sure you have it reviewed at least every 5 years. And the reason why is because the language and the rules and regulations for SSI and Medicaid are always changing, and you just want to make sure that you have the most inclusive and up-to-date language. I'll give you an example. So we actually had a client that was in retirement. Their child was already an adult, and they came to us and said, we've already done this planning, but we did it like 20 years ago, not sure if we need to make any adjustments to it. I said, great, well, let's take a look at it. And I'm not an attorney, but I read this special needs trust, and it said, in no form or fashion can this trust ever pay for housing or food. In no form or fashion. So I don't know about you, but like for me, that's like the most important thing. I need to know that my son has a safe place to live and that he's got food. Like those are the basic necessities, right? Well, I know why this trust was written that way, because 20 years ago, SSI rules, basically you wouldn't qualify if a trust paid for it. But those rules have changed, right? They've loosened up quite a bit. So that trust is not even worth the paper it's been printed on at this point. Yeah, so we always recommend you have those reviewed every 5 years. Kat, my favorite attorney, is in the house. Would you have anything to elaborate on that? Would you agree with that, or what are your...
Yeah, I mean, I think 5 years is fine. I usually say pull out your plan once a year, and just get, when you do your taxes, pull out your estate plan. Death and taxes go together, they say.
Oh, yeah.
Just get all the unpleasant stuff over in one sitting. Review it, make sure the people that you've listed are still in your life, that the information's still accurate.
Yeah. That's a really good point. So whenever we set up our estate plan, come on in, come in. There's plenty of space. When we set up our estate plan, we chose a family member to be a successor guardian, and they ended up moving out of the country, which I love that for us because we get to go visit them in this beautiful place, but that's probably not ideally what we would want for our kiddo who has special needs. So we would want to make sure we're adjusting those kind of things. Perfect, so that's the attorney. Now then, the financial planner. So I can't speak to what every financial planner does for their clients. I feel confident most of them can help you with the protection and growth part of financial planning, which is probably what most people think of with financial planning for retirement, investments, life insurance, stuff like that, right? Which we absolutely all need those things. But if you're in this room today, you probably need a third part, which is the legacy piece, the legacy planning, which is essentially having a plan for what if I'm not here, right? And I need to transfer these assets that I own to my child so that they are taken care of even when I'm not here. That's a very important piece. So there's really kind of two components to that. The first I would say is very important is the trust funding strategy. So if by today you realize we do need a special needs trust, I want you to also understand that you need a funding strategy. How are you going to fund this trust, right? Where is the money going to come from? And more importantly, how much actually needs to go into it to make sure that your child is taken care of. Another piece to legacy that a lot of families put a lot of importance on is estate equalization. So if we have multiple children, we want to make sure that we're not disinheriting anybody, that it feels fair and equitable. So that's something that you want to make sure your financial professional can do with you. Now, the financial planner relationship, is usually an ongoing relationship. You will meet with them once a year, if not more regularly than that, to update the plan, update the figures, and make sure that you're still tracking in the right direction. And I think when we're talking about building a special needs plan, that's also super relevant because our children's ability levels can change greatly from one year to the next, right? And so we want to make sure that the plan is still relevant in that regard. Now then, the government benefits specialist. So this is a professional that we will usually bring into the discussion at the point that we're ready to apply for certain benefits, like SSI, Medicaid, SSDI, or maybe some of the Medicaid waivers in your particular state. Usually this is happening around the age of 18, and we're going to talk a little bit more about that in a minute, but could potentially be sooner than that. But a government benefits specialist, if you have one of those on your team, you're going to have a higher likelihood of getting an approval on your first go, right? So I don't know if anyone in this room has ever applied for SSI. They're going to ask for a lot of documentation, and if you miss one little check mark on the box, they're going to wait 12 months to tell you, nope, you forgot a box. And so if we have a specialist, on the team, they're going to make sure we have a higher than likely chance that it's going to be approved the first time, that we don't have any missed boxes or missing information. This is not usually an ongoing relationship, right? Usually we bring them in at the point we're ready to engage with one of these benefits, and then they help us, and then they leave the relationship. But the financial planner often acts as kind of a go-between, or not a go-between, but like a quarterback, let's call it, where we're bringing these professionals into the relationship as needed. Hi, come in, there's plenty of space. Okay, I'm so happy to see you. Okay, the box on the bottom, other professionals and resources, things like doctors, therapists, teachers, I have found, in just being a special needs mom myself, it's very easy to find great referrals to a good neurologist or to a good, occupational therapist or whatever it is, because we talk, right? Us moms, we talk, and there's abundance of therapists and teachers and doctors out there. I have also found, though, it's really hard to find good recommendations for attorneys or government benefits specialists or financial planners. So if you are sitting here thinking, I need these people, but I don't know where to find them, email me. Let me know, because I have attorneys and government benefits specialists in all 50 states. So I can connect you with the right people. All right, just let me know. Moving on, let's talk about government benefits. So we'll start with SSI. We get a ton of questions about these. SSI, or supplemental security income, if you're wondering, do we qualify for this benefit or should we be applying for it? It's going to depend on a couple of factors. So let's actually start at the bottom of the page for fun. If your child is under the age of 18, they are viewed as a minor. And so when you go to apply for SSI, SSA is going to look at your personal income and assets as the parents, as well as the overall household size, to determine eligibility. So to keep it very simple for today, it's actually kind of hard to qualify for SSI when your child is a minor, particularly if you're a dual income household and you're making more than roughly $3,000 a month, probably not going to qualify. However, when your child turns 18, the rules change entirely, and now they're viewed as an adult. And so when you apply, they're not going to look at mom and dad's income or assets anymore. They're just going to look at your child's personal income and assets to determine eligibility. So if we set things up correctly, they should be approved at age 18, all right? Now there are a couple of rules that we do have to play within, the first being the asset limitation. So as of right now, we can't have more than $2,000 in their name at the point we're trying to apply for this benefit, or they will be declined, they will be denied. $2,000 in their name, right? I see this happen sometimes where mom and dad, they're like, we want to do a good thing. We're going to set up a little savings account. I feel really good about this. I'm contributing monthly. It's for their future. Maybe it's in one of those little bank accounts that, like a teen account or something, but then we have to disclose that if it's more than $2,000, we don't qualify. So put that in your brain, $2,000, that's the limit. There's also an income limit. Depending on your state, It can fluctuate a little bit, but I would say to keep it safe for today's conversation, around $1,000 a month, they can earn their own income, roughly up to $1,000 a month, and still qualify for SSI, at least a partial benefit. And the reason why that's actually important, even if it's just a partial benefit, is because if they're not already receiving Medicaid, then they will automatically qualify for Medicaid if they qualify for SSI. They can be a tandem benefit. And for some families, the Medicaid is actually the most valuable benefit because it covers so many supplies and things that we would normally have to pay for out of pocket. Medicaid can be extremely valuable, way more valuable than the $967 a month that you get from SSI. So definitely a benefit worth keeping. Now, our team has actually put together some spreadsheets to try to quantify what's the value of this right here. And from our best guess, just kind of like middle of the road, anywhere from $1.5 to $2 million is what these benefits are worth. So I only mention that to you because sometimes people will say, well, we do well, right? We don't need this benefit. Or, the $2,000 limit, like I don't want to mess with that. I'm just going to keep what we have and we don't need it. Well, I don't know anybody who would walk, if there's $2 million in a bag right here with your name on it, would you walk by it and not pick it up? I mean, I would pick it up. That's just me though. I would pick it up. So, but understanding those rules and understanding when to apply, right? So the other thing I'll mention is if we're approaching age 18, just know you don't want to apply even one day before. You want to actually wait probably until the first of the month after their birthday. So if their birthday was today, whatever today's date is, you would probably want to wait till November 1st before you actually apply. It needs to be after. But you can start the process of gathering the information, getting the forms ready, but you don't want to press apply until after. Okay, hopefully that's helpful. Any questions on SSI? Yeah?
The $2,000 income, it does not include if they have a trust in their name, right?
Woo, good, that's true. There's only 2 ways that you can have money that won't count against them, and that's a special needs trust and an ABLE account. Yep, and we're gonna talk a little bit more about that. Yep, very good point. Any other questions? No? Okay, let's talk about the next really great benefit, which is SSDI, sometimes called RSDI, sometimes called the DAC benefit, has lots of names. But essentially the way that this benefit works is if our child received their disability diagnosis prior to age 22, then they will likely qualify for this particular benefit. At the point we as the parent start drawing Social Security in retirement, then our child is entitled to a benefit equal to half of that. So as an example, let's say my benefit's $3,000 a month, I'm retired. I know I look young, but I'm retired. My benefit's $3,000, my son would get $1,500. So I'm still gonna get my 3, it's not discounted in any way, he's just gonna get 15 on top of that. Now, these benefits don't usually stack, so once we switch over to SSDI, SSI usually falls away. We don't usually. Now, there are some circumstances where we could. An example of that would be if maybe my benefit through Social Security was $1,000 a month, 1,000, right? My child would get 500. Well, that's below the 967 he would have gotten through SSI, so he would then get a partial SSI benefit to get him to that point. But usually it falls away. So kind of go with that assumption. But some questions I get on this one, and I'm going to try to answer them before you have a chance to ask them, are can we draw off of both parents' record at the same time, right? Unfortunately, no. We can only draw off of one record at a time. Now, technically, we can start on one record and switch to a different record, but we can only do one at a time. So we want to make sure we're pulling off of the larger of the 2, right? Let's see, the other question I get asked a lot is, what happens with the Medicaid health benefits if we lose SSI? So there is a 2-year time frame where you'll still stay eligible for Medicaid. And then after the 2-year window, you'll switch over to Medicare. And so it's designed to be where the child will always have some level of health protection, right? Health insurance protection. There's that weird kind of 2-year window though in between. Let's see. The next question I get asked is, oh yeah, go for it.
So let's say my wife and I have a retirement age where we can retire through our jobs. Let's say it's 60.
Mm-hmm.
We have to wait to 65 to have this benefit.
Great question. So no, technically no. It's very likely that you could start drawing your Social Security as early as age 62. Now, I love that you asked this question. We're going to get a little into the weeds, but this is where I live, is in the weeds. So technically, if you started drawing at 62, your child's benefit would be calculated at 50% of what your benefit would have been if you deferred to 67. So it's possible your child would get more than half of what you're actually getting, right? So with Social Security, every year you defer, it grows by 8%, which is wonderful, right? No financial planner in the world can guarantee you an 8% return, but you can get that by deferring Social Security. But your child's SSDI benefit will always be calculated based on your full retirement age at 67.
But they would start paying it at 62?
Correct. Correct. Mm-hmm. Yep. Yeah, that's a good question. I'm glad you asked that one. Let's see. The next question I get asked a lot is what happens when I die, right? My kid's getting 50%. What happens if I go? So it actually jumps up to 75%, and they're able to maintain it at 75 for as long as they're alive. So this is a very valuable benefit. I will just say for simplicity, this benefit is much less restrictive than SSI. You don't have to do as much accounting and reporting back to SSA once you're on this benefit. And it's often more lucrative as well, right? It's going to often be more than the $967. So very, very valuable there. Questions? Yes.
So if you're getting Social Security disability,
Yeah.
and then that meant like the kids are getting a portion of it,
Yep.
right? So when my child turned 18, I had thought, okay, she'll get the SSI, but then because she had already had it short term, the income, whatnot, right?
Yeah.
I thought it would be automatic. It is not automatic.
Mm.
So now can I put her back on the Social
SSDI?
Security disability?
Ye-
So I ha- that-
Yeah, you can.
So how would we go about doing that?
You would need to reach out to SSA and let them know. You're going to have to find someone good who understands what to do. But yes, you can logistically get her back on there.
And that would be 50% of what I get.
Yes. Yeah, so for those in the room, what I'm talking about here, at any point you start drawing Social Security off of your record, your child will be entitled to half. So if you're personally disabled and receiving your own personal SSDI benefit yourself, they can also get half of what you're getting. It doesn't have to be that you waited until retirement. So thank you for mentioning that. But yes, you can get her back on to SSDI. If you want to email me, I can point you in the right direction. I can get you with a government benefits specialist. Yeah, you're welcome. Yes?
Is there a certain list of disabilities that would qualify, like the acceptance of SSDI, or?
Not really. The definition basically says if they can't have, well, I'm going to get this wrong, but substantial gainful activity is kind of the definition. So it's a bit broad. But again, if we have a government benefits specialist on the team, they can help you assess. And then if we need more documentation, right, maybe you need to get another evaluation through a psychologist or a neurologist or whatever. They can tell you that so you can get what you need to get it approved, if you're wondering, yeah. But I can tell you I have a lot of very high functioning children with autism that get approved. So it doesn't have to be that you're, super high needs. You can usually get it pretty simply. Any other questions on the SSDI benefit? Yes.
In our family situation, we were declined because of income.
Right.
My husband's income.
Right.
But if I myself received disability
Mm-hmm.
as an individual,
Yep.
would that make her eligible?
Yes.
Or would we still be declined because
Nope.
we're still married and
They're separate benefits. So SSDI doesn't have that $2,000 limit or income requirement limitation. It's much more generous, I should say. So no, if you go on claim through Social Security disability, then yes, she would be eligible for half. Yeah, good stuff. Real quick, there is a paper or a booklet kind of passing around. If you haven't signed in, please do, because I have a lot of really helpful handouts and tools that I want to send you at the end of today's session. So make sure your information gets on there. Oh, yes.
Did anybody happen to find a phone? I think I misplaced my phone.
Uh-oh. Does anyone see a phone?
No? Okay, no, we're good.
Okay. We can make an announcement at the end.
Thank you.
All right, let's talk about developing your special needs plan. So, the first thing is, I think understanding what a special needs trust is. No pressure, because I have an attorney in the room, so. But the way I like to describe what a special needs trust is it's essentially creating a new entity, right? So this entity will have its own name, its own tax identification number, its own date of birth or creation date. And by creating this entity, we can put assets into this for the benefit of our child, but the entity owns it. The child doesn't own it, right? And so logistically, that's how we're able to stay eligible for these government benefits. Now, I will just say on a special needs trust, the wording, the language inside of it is very specific. And so if you think your child's going to be eligible for government benefits, you absolutely need a special needs trust. No other trust will do. It has to be a special needs or a supplemental needs trust. And the reason why is because the language in there specifically says that we can't ever take money from this trust and hand it directly to the child. I guess, Kat, anything you want to elaborate on what I just said?
Yeah, no, what you said is right. I say they're special because they have to have that special language. There are different types of trusts. I joke that I've been doing estate planning now for 10 years and I'm still learning about different types of trusts. But a lot of parents will set up a trust for their children to manage how when they receive money. It's a discretionary support trust. It is not the same thing as a special needs trust. There's very particular language Social Security wants to see in there. You're really prohibiting the child from directing, managing, controlling the assets. Most beneficiaries of a trust can go to their trustee and say, I want this money, here's the distribution standard, I'm entitled to it. That's not the same type of trust. And that's the only way the government says, we'll let you keep your benefits because this money is not deemed, quote, available to you.
Right. Yeah, but one thing I just want to mention, though, is the only person who can benefit from the trust is the beneficiary, right? The child who we list as the beneficiary. So they're still going to be the only person who's going to receive any of the benefits of it, but they just don't have control over it. Go ahead.
So that's different than the ABLE account.
It is different, yeah. We're going to definitely get into that. My favorite slide of the whole presentation shows you side by side a trust versus an ABLE. So,
Where would we set up a special needs trust if we needed to?
great question. Great question. So you would definitely need to go through an attorney for that. Yeah, an attorney will help you set up a special needs trust. Yes, and then the other piece I'll mention is there are different types. There's first party versus third party. My 2 cents on it is ideally we want to try to set up a third party special needs trust. What that means is whoever owned the asset before it went into the trust was someone other than the beneficiary. So me and my husband owned the asset. We leave it directly to our son's special needs trust. That's third party. If we didn't do it that way, if we left, like for instance, let's just say we put our son as the beneficiary on all of our checking and savings and life insurance and retirement accounts, right? This happens all the time. He would get that, and it would go in his name, and it would be a nightmare because he would lose benefits. And then we'd have to run to someone like Kat and say, help me. And she would say, okay, I can help you. It's going to cost a lot of money. It requires a court hearing. Is that true? Or like some reporting?
Potentially.
Okay. Yeah, it's a little bit of a process. But then we can set up what's called a first party trust, move those assets out of his name into this trust, and now we're back in business. We have access to government benefits. But the biggest kicker with that is what happens to the remaining assets when the child passes away. So in a first party trust where he owned it, right, it went into his name, we had to run to an attorney, we moved it over. Now when my child passes away, Medicaid's going to take it, whatever's left in that trust. If it's third party, however, so me and my husband owned it, we left it directly to the trust, we get to control what happens when our son passes away. So we can leave it to a family member, we can leave it to, a sibling, or we could even leave it to a charity of our choice. Is that true? You can, yeah. So you can leave it to whoever you want. You have control even beyond the grave, right? Because hopefully our children outlive us, right? I don't know how I feel about that. But anyway, any questions on special needs trust? Yes.
How hard is it to move it? If it was set up as one third party, can you move it to, after it's set up, can you move it to a first party?
Oh, great question. I know how I would answer that, but I would love to hear from the attorney in the room.
I would say no. You don't want to mix them.
I was gonna say, why would
If you don't want to mix them.
Yeah.
Well, if it was set up though, right, because you said with one of them, right, like if somebody passed, then Medicaid takes the money, right?
Well, that's if it's third party. So ideally, if you have the trust already created, then all you need to do while you're still alive is just make sure the beneficiaries that you have designated are the trust and not your child's name. We want to list the trust. And then it's third party. Yeah.
And you can have one of both. Like I've got clients that have a first party and a third party because maybe parents set it up the right way. And sometimes we talk about this with if you have a high functioning child who wants to go out and work, maybe their income, they're making too much money, we'll create a first party for them as well, their money, so they can make more than $1,000, $2,000 a month. But the first party has the Medicaid clawback when that child passes.
Yeah.
You don't want to commingle the funds because we want to keep the government out of our money.
Yeah, we want third party, first party, first party.
So we make it as first party.
No, third
Third party.
Third party. We want it third party. Third party is someone other than the child owned the asset before it went into the trust. Yeah, go ahead.
Oh, sorry. So if we relinquish part to the trust, let's say a house, and then we put it in the trust for the child, with the
to stay eligible for government benefits, if you're on SSI, they want you to use the SSI to pay for essentials like housing, and then everything else can supplement, not supplant the benefit. That's kind of the verbiage, is that right? Yeah, so that one's particular to SSI and Medicaid. There's some other benefits that doesn't necessarily apply for. But did I answer your question, I guess? Yeah. So are you worried about maybe you're asking about the trustee, like who's going to manage it? Is that what you're asking?
Yeah, who would manage it, and like how would I say for sure that, I know I have to find someone I trust, but
Yes.
I'm going.
Yeah. It's almost like I paid you because this next slide is going to talk all about that. I swear. I promise I did not pay her. I promise. Did you want to ask or you want to wait? No pressure.
I'll wait.
Okay. All right. You got it. Any other questions on special needs trust before I move on? No? Let me just mention this. I know when there are traumatic brain injuries, there can often be settlements. And so a settlement would be a first party trust. Okay? So maybe in our minds we can think about that a little differently, the settlement money. Maybe that's what you were alluding to with the home, right? Because sometimes when we get this settlement, we're like, how can we use this to buy a home? Which you can, from my understanding, you can do that. The child has to be the main benefitor of this property though, right? So we can't live there and have them live somewhere else. But a first party trust I don't want you to think it's a bad thing, right? It's a necessary thing in that example. Another example of why we would want to have a first party trust is if there is a child support situation, right? If we're getting child support beyond age 18, well, that child support is going to be considered a resource, and we're not going to qualify for SSI or Medicaid unless we have a first party trust. Yes?
So I am going to go ahead.
Okay, yes! Thank you.
My son was diagnosed with a brain injury at the age of 3 months.
Okay.
So for 10 years, I was a full-time stay-at-home mom.
Yes.
Like 5 children off of child support and just Social Security.
Yeah.
Well, last year I started teaching. I went to school in the meantime. Like, I did whatever I had to do to supplement the income because my son at the time, he was in the hospital for 2 years, and then once he got out, we literally were doing therapies like 4 days a week. It was
That was your
there was no
full-time
way
job.
I could work.
Right, that was your job. Yeah.
So I started teaching last year, and so my son had his Social Security review after not having one forever. We just had one.
Yeah.
Well, when we had our review, they're like, "Oh, well, you have this income." And I was like, "Yeah, but I also have 4 children, and I do earn this money. Needless to say, now I owe. I have to pay back." So it's like, I think everybody's adults. Damned if I do, damned if I don't, because
Right.
I work now and I make decent money, but is it enough money? I'd rather have the insurance than the funding, if that makes sense.
Yes.
Social Security, because I
Yeah.
know that my insurance at my job will not cover the things that my
Right.
son has to have.
Right.
So, my question is, in situations like this, do you need a trust or do you need something else just so you can keep the Social
Medicaid.
Security for the
You want the Medicaid.
more so than the income?
Well, there's a couple of ways around that. Depending on what state you're in, you can actually like buy into the Medicaid program, and it's very affordable.
Well, so I'm in Georgia, and
Okay.
it's not that affordable.
Okay.
And it doesn't really work because I try to read, research, advocate, find out as much as I can on my own, so that I'm not blindsided when things like this happen.
Right.
So I knew once we had the review, of course they're going to know I work. I pay taxes. Like I was never trying to hide that, but as I mentioned to the worker, like I didn't know I was supposed to say that I earned this because with my children and my bills and the things that you have, like we still would qualify just
Right.
from what I've known. But it's like I got to decide. Well, now I have to pay them back.
Right.
And he's still on the program, but barely.
Yeah.
So now it's like we're walking on eggshells. Like,
Right. You don't want to.
I don't want to lose the Medicaid. I don't care more so about losing the income, but
Yeah.
I need the
You need the Medicaid.
insurance portion of the SSI.
Yeah. Yeah, I would say we should definitely talk offline, and I want to connect you with a government benefits specialist who can counsel you a little bit on that and give you your options. But yes, there are options. I don't know from like a trust perspective. I don't know if there's a way around that.
I'm sitting here thinking about like at least in Texas, we have something called a Miller's Trust, where if
I thought that was my first.
or you could create an irrevocable trust and divert all your income in there, so it's essentially you're not earning it, your trust is earning it. You couldn't benefit from that yourself, but then basically you're not making that income. So that could potentially be something, because it's the income, right, that you're saying is disqualifying your, so.
Yeah, maybe a combination of a government benefits specialist and attorney can figure it out for you.
Okay.
Yeah, I'll connect you. I've got some good people in Georgia. Okay, for the sake of time, I'm going to move on. You guys, this is like filling up my cup. I love these questions, but they only gave me an hour, so. Naming a trustee, this was your question. Okay, so when you are sitting down to set up this trust, there are several roles that you'll need to designate, one being the trustee. Sometimes people get a little bit confused on what's the difference between a trustee or a guardian or an executor, right? These words get kind of confused, used interchangeably, but a trustee would be the person or entity that's in charge of managing and administering the trust itself, okay? Now, when you're setting up a trust, a special needs trust, I believe you can, while you're still alive, you can choose to be the trustee yourself. Is that true, Kat? Yeah, so while you're alive, you can set up the trust and say, I'm the trustee, but when I pass, it's gonna be this next person that I designate, and so on, right? Now, I will just tell you, most people don't choose to fund a third-party trust until they have passed away. And the reason why is because when we do that, when we put the asset into the trust, we lose control over it, right? And it can only be used for the benefit of our child at this point. So if something happens and we lose our job and we need this money, it's going to be hard to get it back out. So we usually recommend that you maintain control of the asset, you have the trust ready to go, we list the trust as beneficiary, and it gets funded upon death. right? So usually you won't probably be listed on there, but you could be. Now then, when you're choosing a successor though, who's gonna be after me? You could certainly choose a family member or a close friend. That's an option. It's very common for us to see a sibling listed as a contingent trustee or, yeah. And then you can also go with a co-trustee relationship where you have multiple people. Maybe you have a sibling and a family friend, right? Or two siblings or aunt and uncle, whatever. You can have multiple people. Some people like this arrangement because they feel like there's some checks and balances that would happen there, that someone couldn't get crazy and be like, let's buy a Ferrari, right? I think this kid needs a Ferrari, let's do that, right? Because before we could do that, both people would have to agree. And let's hope that the other person would say, I don't know about that. I will say though, attorneys tell me they don't love that arrangement necessarily because it can open things up to conflict down the road. You know, if people feel really strongly in different directions about how things should be handled, it can create issues. But for some family dynamics, that's a good fit, right? Now the other option that I think is important to understand you have is a third-party corporate trustee. This might be kind of what you were asking about. In full transparency, that's the route we personally chose to go, is we chose a corporate trustee, which is essentially a bank or a trust company that is in charge of managing the funds. Now, what they are in charge of is, you know, how are the assets being invested? What assets are we pulling from first? How are we, you know, keeping track of taxes, right? They're also filing tax returns, or if they need to do any accounting with the courts or with SSA, they're doing all of that. So it's a very big responsibility, right? You guys are all in this room today because you're trying to figure out how to do this, and you've had some time to like figure it out, hopefully, but imagine being thrust into this, right? Like someone just says, oh, you were named trustee, here you go, don't mess it up, right? And remember that $2 million that's in that bag on the, right? That's what's at stake if we make any mistakes here. So I personally love a corporate trustee. Some attorneys will not agree with me. I actually don't know how Kat feels about it, so we'll ask her opinion in here in just a minute. The attorneys who say they don't love that agreement or that arrangement say it's expensive, right? But I'd rather pay 1% of my overall estate to know that it's done correctly. And, you know, and knowing that these people, that's their job, that's what they do all day, every day. But you do have options, right? And you could certainly say, I'm gonna start with a family member, and then maybe a corporate trustee is my backup to that person. That way, if they pass away, then it has another, like that's kind of our safety net, right? So that's definitely an option. Did that kind of help answer your question? Okay, perfect. The other thing that a corporate trustee will often do is help with care coordination, right? So they're coordinating the care plan, talking with the caregivers and making sure it's all working together. So there's extra support that they provide. Okay, let's talk about ABLE accounts. So if you haven't heard of an ABLE account, that's because they've only been around for about 10 years. They're actually fairly new. And Congress authorized each individual state to essentially sponsor their own program. The only way you can have an ABLE account is if you have a disability. And you have to have that documented prior to age 26. As of today, next year though, that's actually changing to 46. So as long as the disability is documented prior to 46 next year, you'll be able to get one. But what's great about an ABLE account is that it is a way where we can put money aside now, we can save money, and it can grow tax-free, we can pull it out tax-free for anything that's gonna create a better life experience for the child, right? And it won't count against us for Medicaid or SSI. So that $2,000 limit I told you about, that's true for everything except for an ABLE account or a special needs trust. So love that. The next slide here kind of talks about what we can use it for. So here's a very comprehensive list. We can use it for education, housing, transportation, health, you know, legal fees. We can set up a special needs trust with it or wills with it. You can use it for funeral or burial expenses. So truly anything, right? One time someone said, Well, I told them the only thing I can think of we couldn't use it for would maybe be like alcohol or tobacco. I don't know though, because then someone said, well, what if it's their 21st birthday and we're having a party? I'm like, well, maybe. I don't know. I don't know. It's kind of a...
The gift card.
There you go. It's kind of like the honor system, you know? So anyway, but there are some kind of interesting nuances with the ABLE account. And this is that slide I was telling you about, my favorite one, where we show you side by side the ABLE account versus a third-party trust. So in terms of eligibility with an ABLE account, like I said, you have to have that diagnosis prior to age 26. So for some of my traumatic brain injury families, that doesn't work for them if the accident or injury happened after age 26. But again, that's changing next year to 46. So hopefully that opens it up a little bit. In terms of a special needs trust, there is no age limit. So if it happened late in life, or technically if we don't even have a true diagnosis, you can still have one. I actually had a family where that happened. The woman is in her 50s and it's very clear she has autism, but back when she was a kid, they just didn't, get it documented. And so there is no technical diagnosis, but she still has a trust. In terms of setup, an ABLE account, very, very easy to set up. You can actually do that on your own. I would recommend, if you are in a state that has a state income tax, that you use your state's program. So here in Texas, we don't have a state income tax, so there's actually no benefit of me using a Texas ABLE. I could use any of the other 49 that I want. They all work a little differently. They have little bells and whistles that are a little bit different. However, if you're in a state with a state income tax, definitely do your program because you will get a state income tax deduction for your contribution. But again, that's something you can set up on your own. A special needs trust, you do need an attorney. Absolutely, 100%. Don't try to do that on your own. You need an attorney. In terms of contribution limits, this is a big one. So an ABLE account, the maximum we can contribute is $19,000 per year for 2025. They just announced 2026, it's $20,000 a year is the maximum you can contribute. And that's from all sources, right? So if grandma gives us 10, uncle gives us 9, we're done. We can't put anything else in this year. In a special needs trust, though, there is no contribution limit. We could have $100 million in there. That's perfectly fine. In terms of account balance, the maximum we can have in the ABLE account and still stay eligible for SSI is $100,000. So we can't go above that. Special needs trust, no limit. We can stay eligible at any amount. In terms of uses, the ABLE account has a wide range of uses. Like I said, we can use it for anything that's going to create a better life experience. You can use it to offset housing without it affecting SSI. Yeah, very, very easy to use. A special needs trust, wide range of uses, but we have to be careful if we're on SSI. We just have to make sure we're using our SSI to pay for housing so that we get the full amount. Otherwise, your benefit can be deducted. Quick question, and if you don't feel comfortable, don't raise your hand, but is anyone already receiving SSI? Their child's over the age of 18? 18, yeah. Okay. Yes?
We're not receiving yet, but we have applied.
Awesome. Make sure you're charging rent. You have to charge rent, because that's the only way they're going to be eligible for the full 967. If you don't, then their benefit will be reduced by a third. They'll only get $600 and some change. So again, if you need a rental agreement, email me. I have one I can send to you. And you do need to actually show that whatever your rent amount is, that's coming from their account into your account. Once it's in your account, you can do whatever you want with it. You can put it into an ABLE account, you can put it into the trust. You can buy life insurance with it to fund the trust at some point down the road, which is a really great strategy.
Is there a limit for what the rest?
Not really. It has to be at least $350, but I have seen families who are charging $800 or $900 a month for rent. Great point. So I have heard from some CPAs that if you call it a room and board agreement, that you don't actually have to pay tax on it because it's like their fair share of the house expenses. I don't know. I'm not a CPA. No, because no, they're just like renting a room, or like they're like contributing to the overall household. So no. Yeah, I get some conflicting advice on that with the CPA. Some are like, absolutely, it's a room and board agreement, there's no tax. Some are like, absolutely, it's rent, it is tax. So I think it's going to depend on your CPA. Real quickly, moving on. In terms of taxes, in an ABLE account, tax-free withdrawals. We love tax-free, right? In a trust, I think what's a little confusing about a trust is some people think that a trust is like this one account. And that's not true. This trust is this entity, and the entity can own lots of things, right? It can own a checking account, a savings account. It can own a retirement account that was inherited. It can own property, right? It can own all these different things. So if the asset that is owned by this trust would have created a taxable event, we're going to have a taxable event, right? There's no way around that. And unfortunately, the tax rates inside of a trust are accelerated. So if we're not careful, we might actually pay more. That's another 3-hour lecture on a different day. But remaining assets, this is a very important one. In an ABLE account, it's going to look and smell a whole lot like a first-party special needs trust. So whatever's left in that ABLE account, Medicaid could take it. Now, there are a handful of states that have waived this, where if you reside in that state and you have that state ABLE's program, they won't try to recover. But the majority of the states, they will. Here in Texas, absolutely, they're going to come take it, for sure. Third-party trust, though, like we said, we get control over that, so we can keep it within the family, right? We don't lose those assets to Medicaid. And then last but not least, ease of access. So ABLE account, super easy. A great analogy is, let's say we want to go on a Disney trip. We can do that, right? Let's say we have a trust and we have an ABLE account. That's what the child's living off of. We want to go to Disney. What would have to happen is the trust would have to pay for the flight and the hotel and maybe like breakfast with the Marvel characters, right? Whatever we plan on doing while we're there, they're going to pay that directly, straight from the trust to the point of service. But when we get there, let's say our kiddo wants a souvenir, or they want one of those $20 ice cream cones that they sell there, then we would use our ABLE card, because it comes with a debit card and they can use it right at the point of purchase. So does that kind of give you guys a clarity of how they kind of work? Yeah, a little bit? The ABLE account, much easier to access. You can actually do it right at the point.
You can have a trust and an ABLE account at the same time.
Absolutely. Yeah, and I usually recommend it. I recommend that you have both. I don't usually recommend that you, sorry, I keep messing with this microphone here. I don't usually recommend that you get real aggressive about funding an ABLE account. I think you should have one and have it ready to go. For you in the back who applied for SSI, it's probably going to take a year, but when you finally get approved, they're going to send you a $10,000 check. That's why we want to have an ABLE account, so we can get that money out and stay within that $2,000 limit. Or if grandma doesn't get the memo and leaves everyone $5,000 when she passes, we need a way to get money out quickly. So I think you need to have one. I don't usually recommend that you get real aggressive about putting a ton of money into them, because Medicaid could take it. If this is something on your mind and you're like, wow, I really do want to get a plan in place, please reach out to me. I have made an agreement through Team Luke that anybody who wants to do the planning, we will waive our planning fee. So there's no fee for the comprehensive deal. And we will give you, we will provide you what's called the cost of care analysis, which is that very valuable number that you would need to know of how much needs to go into the trust, right? Hopefully you all know you need a trust, but how much actually needs to go into it to make sure that when we're gone, your child has what they need to live the life that they want. Now, if you haven't signed up on the form, please do, because I'm going to send you guys a couple of things. I have a special needs planning checklist. I actually brought a bunch of those. I have a table. Come by and see me. I'll give you one in a physical form, but I'll also email you one. The other thing I'm going to send you is something called the letter of intent, which is it's a great document where you can write down all of the things that are really specific about your child's needs. I don't know about you, but I'm kind of the primary caregiver, and all of it lives in my brain. If I were to leave this earth, my husband would be lost. he would not know what to do. But we have this letter of intent, so if he needs it, it's right there. He'll know who to call, what my son's allergic to, all the things, right? The other thing I'm going to send you is something called Beyond One Day at a Time. So if you leave here and you're like, wait, did she say I need a first party or third party? Or what was the difference between SSI and SSDI? It's all in there. So you can refer back to it. And then the last thing I'll send you is the link to the Able Today Analyzer. So if you are interested in setting one up, it'll take you right. There's a map. You can click on your state and it'll take you right to where you would want to go to open the account. And with that, I'm like 2 minutes over, but thank you guys so much. Y'all had really good questions. And I'm even happy to stay if there's more.